I think at the end of the day, they'll cut production. They're already trimming, well, cutting 500,000 barrels a day in December. The problem is it's not enough. I mean, they're pretty much snookered by Trump. I mean, Trump led them to believe that the Iranian exports would be zero. It turned out they're going to be 1.2 to 1.5 million barrels a day, way higher than people thought. And meanwhile, we had record production from Saudi Arabia, U.S., Russia, all at the same time. I mean, the Saudis, based on ship tracking data, are up over 11 million barrels a day. They're way too high. So the market is just oversupplied.
So to answer Joe's question, this is not a weak demand, a weak global demand picture. This is simply an oversupply?
Not as far as we know. Not as far as we know.
I would say, you have to say, the emerging markets have been weak because of a very strong dollar. You got to keep an eye on the dollar. It's been incredibly strong, and that's hurting. But I think, broadly speaking, it's an oversupply story. And I think they will cut back, but they're not likely to cut back enough to drive prices back up.
Look at that,
to anything like $80 Brent. Maybe I think we're going to be in a $60 to $70 Brent market.
All right, so we saw oil prices run up on expectations for the sanctions. Then we saw the exemptions for the sanctions, and you saw oil prices come back down as a result. But now I hear that they're already trying to rein in some of those exemptions and that those will not be long-term exemptions. What's the story on that?
Well, the exemptions are for 6 months. They're going to run until basically May 5th. So I think there will be cutbacks from there. But the fact that these exemptions exist today, the Chinese, I was there 5 weeks ago, I was in Beijing. The Chinese companies thought they were going to get zero waiver. Now they're getting 470,000 barrels a day. The Koreans are getting a couple hundred, the Indians 300. So this is far greater than anyone anticipated. And not surprisingly, the companies went to Saudi Arabia and asked for more oil, and they got it. So basically oversupplying the market. Now, this is a tax cut, $650 billion oil price reduction. This is a positive for global consumers because this is a dramatic decline in prices.
But it's funny. We used to think sometimes when it goes down that it's a great tax cut for everybody, and then we flipped that argument on its head depending on which way it's going.
It's because of U.S. shale. I mean, U.S. shale has changed everything. It's made it harder for OPEC really to manage the market because now we have a greater price elasticity of supply than we ever have. U.S. production of crude oil condensate growing 1.4 million barrels a day, plus NGLs another 600 a day. And this is a massive expansion.
That's an amazing chart. And you know, nothing about production in the United States changed right at that peak for the sub. No, and you know what that also lines up with, and I'm just going to say it one more time, is that's pretty close to Powell, too. And if you believe that, you know, the only way recessions ever come are they're orchestrated by overshoots in the Fed, and it also, every time you raise rates, the dollar gets stronger. I mean, it correlates, the sell-off correlates with when he was construed as being too hawkish about what's necessary. And I'm not convinced it's not. I mean, people are starting to fear that the business cycle is long in the tooth, I think, right?
Yeah, I think that's true. We are long in the tooth, but to the extent that we don't have inflationary pressure, where's the concern about inflation to raise
They always
interest
seem
rates?
to find a way. I mean, recessions we never cured them. We can't inoculate ourselves. We always do it again to ourselves somehow.
But historically, a lot of it's been related to incredibly strong oil prices. And we just have the opposite now. We're getting a real benefit from that. We're going to have, I mean, consumer price index is going to be very weak over the next few months because of this oil price decline.
All right, let's hope it's supply.